Profits and gains of business or professions. Usually, if you are running a business, you'll call profit. In case of professions, usually we'll call gains. Okay. So we'll start with section 28 and ends with 44 to be covered here for the PGBP. Okay. Section 28 to 44 we have. Right. Let's start with the section 28. Section 28. Charging section. So we have studied already salaries as well as income from house properties, right? Salaries and income from house property. For each and every heads of income, there will be charging section. In case of salaries, we have the charging section. In case of income from house property, also we have the charging section, right? Similarly, for the PGBP also we have the charging section. Under salaries, we studied the section 15 class 1 and all for charging section, right? So due or receipt, whichever is earlier. In case of advance and arrear, it will be chargeable on receipt basis, subject to relief. All these things are the conditions. Similarly, when we covered income from house property, section 22 deals with that. Section 22 gives some conditions to consider that income from house property to be chargeable under this head. Similarly, here section 28 is the charging section. What are the income will be falling under this category? Okay. 28. If these incomes are there, definitely it will be taxable as income from PGBP only. Clear? Now, charging section. The following items are chargeable under PGBP. So we have been given around 10 items here. We try to finish up all the 10 items one after one here. First one is PGBP. PGBP will be taxable under this head, section 28. PGBP means maybe business, profession, vocation. Business means any trade or commerce, including manufacture as well as adventure. All these things are falling under business. Any trade, commerce, manufacture or adventure. Okay, if you are involving in these activities and earning any money, will be called as business income. Profession means doing some services due to the educational qualification like a doctorate, engineer, cost accountant and chartered accountant, company secretary, advocates and all will fall under professionals. They have the education qualification. With that qualification they can do. Vocation is nothing but skill, natural abilities, right? Skill and natural ability will fall under vocation. Okay, whatever it may be, artistry, pottery and all these things are falling under vocations. But in case of the receipts, because of these reasons, can be categorized into revenue receipts as well as capital receipts. In case of revenue receipts, it will fall under PGBP. Okay, in case of capital receipt, that will not be falling under PGBP but will be falling under capital gains. Okay, for example, there's a land for a business. Okay, usually they have the land for their own business purpose. Sometimes they want to shift their business from one location to the other location. They simply sold their land and building. Selling the land and building is not a revenue receipts, right? So it's a capital receipts. It's not their regular trade activities. It's a different one. By selling the land and building, they will get huge collection, will be named as capital gains, will not be revenue receipts. So because of these three reasons, we may get the money, but that income should not be in the form of capital receipts. If it is being the capital receipts, it will be taxable under capital gains. We will be studying in the next head. Clear? Hope now you will be able to understand the first basic idea about PGBP. Second one being income derived from trade or professional association from specific services for its members. Is that okay? Now, there is a club. Or maybe in a flats, we may have flats associations. Their main purpose is, its main purpose is to keep the flats neat and tidy. Is that clear? So probably A, B, C, n number of members are there. N number of members are there. These members will pay what? Membership fee. Membership fee or common fund. Using that fund, the flat association maintains the place neat and tidy, and electricity facility and swimming pool, common area maintenance, common area gardening and all. There may be in today's, you might have heard about the community centers like they are developing within the campus. Okay, gym and cafeteria and some reading library, like everything is developed. Okay, sometimes the maintenance itself equal to some rental. We thought paying 25,000 rent is exorbitant. Then they will charge 25,000 for the maintenance alone. See, apart from that building value. So those value they collect, fees collected for rendering the common services will not be considered for the taxability. Okay, they cannot say the fees collection being the revenue for the flats association, provided the amount collected by the flats association for maintaining the common area and common services to all. Suddenly, as they have the complete pool of support staff, suddenly A needs his personalized service. In his own flats, he's stuck with some trouble, wiring problem or plumbing problem or some problem. Rather than he's searching for a new laborer, he simply approaches the flats association. Now, flats association did service for them. For that, a special charge is recovered, probably 5,000 rupees for electricity and plumbing charges. This 5,000 will be taxable. Is that clear? This is called specific services. This service is especially for A, not commonly offered to all. Then it is called specific services. In that case, amount collected for the specific services will be considered as PGBP. Okay, exception to the principle that a surplus of mutual association cannot be taxed. Why this is not taxed, sir? So fees is collected around 5,000 rupees per flat members, okay, or owners, flats owner. Around 100 owners are there, so 5 lakhs is collected. The 5 lakhs collected, is for their common benefit. As it is for the common benefit, it's not taxable. It's not taxable at all. Okay, mutuality case. We have already studied in case of income from house property also, mutuality case. So it's for the mutual benefit. We organize these kinds of support ourselves, sir, for our betterment. We don't have any intention to make any profit out of that. But while collecting this and spending the money for the common purpose, there may be some specialized specific services to certain person and demanding some extra fees, then that will be coming under PGB. We hope you will be now able to understand this one. Second point is over. Third point is all about any compensation for termination or modification of management or agency in India will also be considered as PGBP income. So number one being PGBP relates to revenue receipts of revenue receipts from business, professions, or vocation, or any specific services done by the professional association or trade associations to their member, not being the common one. Common means automatically it's coming under mutuality. Okay. Another one is any compensation for termination or modification of management or agency in India will be considered as PGBP income only. Is that okay? So you already studied the same concept, termination and modification in salary, section 17 class 3, profit in lieu of salary. If the employee is terminated or his scope of service is modified, because of that some extra compensation is offered temporarily, then that will be considered as section 17 class 1, profit in lieu of salary. Similarly, XYZ is a company, XYZ is a company and co, okay, or limited company, takes the role of administrating ABC entity, okay, ABC entity. So ABC requested XYZ Limited to administrate our entire company. It's a big company, cannot be handled single-handedly. So they deputed the team XYZ Limited, being expertise in organizing all these things. For that, ABC has made a payment. So probably yearly around 1 crore is paid. And because of this payment, this XYZ Limited taking care of the administration of ABC. Is that okay? With a condition that this contract is for at least 5 years. 5 years. It happens always. So earlier, no, the I think RSK school in BHF. How many have heard about the RSK school here? You heard of. Okay. So RSK school was administered by Montfort's team. Sometimes later it was that the contract was cancelled. Then Global Village at some school management is now running that school, RSK school. So we cannot run, sir. So we debut to some team to administrate my entire business, and for that a consideration may be given to you, right? After that, Montfort came and started their own institution in Khartoum. Okay, it's now very famous. So RSK was administered by Montfort team. So Montfort team is now an agency like for the investor. So I am being the investor. I cannot take over this business. I recruit some third party to control my business. So he is my agent to represent on behalf of me to administrate that. That's why it's called, either it may be agent or management. Is that okay? 5 years contract. In a matter of 3 years later, ABC is not satisfied with the XYZ Limited's performances. He terminates this. XYZ immediately demands, sir, as per the contract, so 5 years in the halfway through third year, if you are terminating, you have to pay me a compensation. Any compensation payable to XYZ by ABC is the PGBP income in the hands of XYZ, as well as it may be the PGBP expenses in the hands of ABC. Is that clear? Hope you will be now able to understand the third point here. Any compensation for termination or modification. Termination is nothing but stopping the management support hereafter. No need to give us any support anymore. That's called termination. Modification, extra load may also be given or some load may be reduced so that the consideration may be negotiated after the discussion. So because of that, if there is any additional payment or lesser payment will be considered as PGPP only. Clear? Now, profit on sale of import license, duty entitlement passbook, duty free replacement certificate in all these cases, and cash assistance by Government of India for exports and duty drawback. All these things are considered as PGBP income only, right? Anyhow, these terms are really unfamiliar, okay, for you, because these terms are used in the case of excise duty, especially import and export. It may be applicable for the import and export. Here we don't have the wider applications at the income tax level. Anyhow, better you need to have slight idea about these things. Okay, let me explain a few here. Import license. Okay, see, if you want to import from US or some foreign country, probably UK and India wants to import from UK. Okay, so to import that, they need to get the approval from the import export board. Okay, so unless they get the approval, they cannot go for importing. It's a licensable. Unless you have the license, you cannot import. So A has worked for getting the license and got the license also for import. Suddenly after getting the license, A doesn't want to do the business. Automatically they have the license to import, but the purpose is now no more required for A. Okay, they want to cancel it. But cancel means always it's loss only. Suddenly what happens, one more business person, B, approaches A, sir, I need the license, sir. Okay, I don't have the license. If I want to apply fresh license, then it costs me and I have to wait for 2 or 3 years also to get the license. Rather than you send that, or you transfer the license, or using the license, you can purchase and give it to me. So now, as per the B's requirement, A gives the license to B. Hereafter, B has the power to import all these things. For that, B has paid, say, around 20 lakhs or 30 lakhs, whatever it may be. This will be called as income, PGBP income in the hands of A. This is what about the profit on sale of import license. My import license is sold. Similarly, duty free replenishment certificate, I can sell that for a profit. That will also be considered as PGBP only. Duty free replenishment certificate. So replenish is not refilling. Okay, duty free. Whenever you are importing from foreign country, you have to pay the duty, right? Okay, as you have to pay the duty, it's really a burden for you. Sometimes what happens now? Why there is a huge duty payable? Why there is a huge duty payable? Right. So main reason is when you are importing from foreign country, India is in need of foreign currencies to settle the dues. Right. See, if you are importing from UK, you need to have the sterling or dollar, okay, or euro. Otherwise, you cannot import from foreign countries. That's a problem. Okay. So India is running short of the foreign currencies. Forex reserve is running short. So very often you can see the newspapers. India has forex reserve for 6 months or 1 year, like you might have heard now and then. So Indian government is always playing a vital role to decide how much we can retain, how much it should be preserved, how can we increase. All these things are planned by the Indian government, right? Especially RBA, especially RBA. Is that clear? If you are importing, definitely what happens? Foreign currency is now between India and USA. You might have seen that in the newspaper, right? 25% plus penalty and all may be expected. Huh? That's how the thing is playing a game in between India and the USA currently, right? So 25% plus penalty and all. That's how the things are there. So Indian government is pretty happy to export, but unhappy to import. Because of importing, they have to give the forex. Indian currency, no problem. Okay, overnight, let the Nasik press may be operated. You will get the Indian currency printed. But how can we print a dollar or other currency? So no other way. We have to export and get it from foreign countries, right? So that's the trouble. So Indian government is pretty happy for exporting, but X says, "Sir, I want to import this one, sir. For that, I need around $1 lakh, sir. $1 lakh? No, 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 sir. If I import with $1 lakh, I manufacture some commodity, I sell it for $2 lakhs later in foreign country. Oh, is it so? Then you are allowed to import. You are importing and manufacturing and you're sending it back where you are getting the dollar double time. So the government is very happy. Now, that is called duty drawback and cash assistance. So, if you are planning to export a lot, at the time of import, you pay the tax and later you show that you are re-exported and get the duty free or the duty may be received back. That's what about duty drawback. Okay. You can withdraw the duty paid. The duty paid, okay, India and UK. So India imported and further duty is paid. Later on, you have exported. On export, what happens? The Indian government is pretty happy. Sir, already I paid the duty. No problem. You can withdraw this. So if you are withdrawing any revenue you get, it's nothing but PGBP income. Duty is your expenses. Similarly, duty drawback is your income. Clear? Now, the other case, you export, no import. The government is double happy. Okay. How much worth you are exporting, sir? 100 lakhs dollars, sir. Oh, so much. I will give 10 lakhs free. So only 90 lakhs. So this 10 lakhs you will be getting at free, no, it's called cash assistance. The cash assistance is your revenue. Otherwise, you will be getting 110. From the foreign export, 100. From Indian government, 10. 110 you will be getting. 110 you will be getting. Cash assistance. Okay. Now what happens, you export $100. Government wants to give you 10 lakhs dollar. So you exported for 100 lakhs. I am very happy. So I am offering you 10 lakhs. Immediately, A says, sir, don't give me 10 lakhs because later on I have to import some material for export purpose. Some raw material, some ingredients. Oh, do you want to import? If you want to import, you have to pay the duty. See, import by paying the duty, later export, get it back is called duty drawback. Now you exported and demanding the RBI, sir, later on I am going to import. So as I plan to import later on, give me some consideration. Okay. So if you are exporting for 100 lakhs, I will allow you to import 40 lakhs worth of goods without paying the duty. That is called duty-free refilling goods. That's called replenishment. So first you export, stating the value of the export, you get the permission to import later without paying the duty. In the reverse case, you export first. Okay, export first and get the duty-free replenishment certificate. Import first, what happens? Pay the duty and later on exporting, you will get the duty drawback. You can withdraw. Or you only export, stating that you will get the cash assistance. I want to import for my operations. So for that, I need to get the license. I got the license. Thereafter, I don't want the license. I can simply transfer to somebody else at a cost. All the revenue will be considered as a PGP only, including duty entitlement passbook, also similar to duty drawback. Similar to duty drawback. Is that clear? So these are the PGP items we have. Now, fifth one. Actually, perquisites. Value of perquisites received for business or profession also PGBP. Means benefit in kind. Benefit in kind. Is that okay? Clear? So, Dr. A gives wonderful treatment to Mr. P patient. Okay. And patient gave him fee, say 1 lakh. And very much satisfied with Mr. A's performance, Dr. A's performance, he gave a gold ring for rupees 25,000. Now, what about the fees for or revenue for the Dr. A, PGBP income? 1 lakh is also PGBP. This 25,000 is also PGBP. Is that okay? So, 1,25,000 will be the PGBP in the hands of Mr. A. This is nothing but direct cash benefit. This is nothing but perquisites benefit. That perquisites value will also be considered as a revenue for the PGBP. It will be taxed as business income. As business income. Is that clear? Okay, then. Now, already we studied in salaries. XYZ and Co. XYZ and Co. Where X, Y, and Z are the partners. 3 partners are there. If any salary is given by XYZ to partners, will not be falling under salary. That's how we have studied in salaries chapter. Then this will be a part of PGBP only. As this one is called as PGBP stated under section 28, this is not salary for the taxable purpose under section 15 class 1. Is that clear? You have to understand. It may not be salary alone. It may be interest or salary or bonus or remuneration or commission, whatever the name may be. Whatever it may be payable by the partnership firm to their partners will not be considered as salary or commission or income from other sources. It is always PGBP income only. Always PGBP income only. Interest, salary, bonus, commission, remuneration payable by the firm to the partner will be the PGBP income only. Is that clear? And seventh one being the non-compete fee or non-sharing fee. Okay. If any non-compete or non-sharing fee received, then it is falling under PGBP only. Is that okay? For example, Apollo Hospital and Dr. D. Dr. D. Okay. So, Dr. D has his own. So, Dr. D has his own clinic. Okay. Visits Apollo hospitals also for now and then as a contract basis or as an employee. Here the working hours between 9 to 1. He runs the clinic between 5 to 8. Apollo hospital has paid a contract revenue, maybe employee or contract revenue. Okay. If Dr. D employed by Apollo hospital, then it's a salary. Else it may be contract basis. Number of patient you see today, based on that some honorarium may be given. That may be the contract basis, right? Whatever the mode may be, Apollo hospital offers him around 2 lakhs rupees per month. Okay. And in the evening, again he runs a clinic in his own and he earns the money from there also. And Apollo hospital charges around 500 rupees per patient. Okay, per patient. In the clinic, he charges only 250 per patient. What happens then? Always is the trouble. He visits the Apollo hospital and grabs the customers and comes to his own clinic and makes good money. Right. So that's the problem. He builds his own clinic. So always know in these cases, they will have the tie-up. You get the 2 lakhs per month. Plus, you should not run the clinic hereafter. For that, I will pay another 1 lakh. So 3 lakhs. Okay, if the 2 lakhs being contract based payment, not as a salary, then it will be considered as PGBP income. And you don't compete with me by running one more clinic later on, then for this also I will pay one more 1 lakh. This is also PGBP. This 1 lakh is called non compete fee. Non compete fee. Okay, non compete fee. Is that clear? Similarly, KFC or Pizza Hut, whatever it may be, there's a KFC Trichy dealer. Okay, Trichy dealer. So KFC Trichy dealer has paid around 5 crore rupees to run the KFC restaurant, okay, in Trichy. Clear? Not only that, KFC will make, Trichy will make another 1 crore. Don't give such a branch franchise offer any others other than KFC Trichy in this locality. It may be owned by A. You don't give this franchise to any others in the same locality. You can give some other places. This 5 crore is PGBP income for the KFC. This 1 crore is also PGBP income for KFC. This is nothing but non-sharing the cooking flavor and the other things, no, by the KFC to this means to other KFC brands in locality, in Trichy locality, right? So that is called non-sharing, know-how, patent, copyright, or trademark. This 5 crore is to get the trademark from KFC. This 1 crore not to offer any others in the same locality. Okay, it spoils my business unwantedly. So for the KFC, this 5 crore is also PGBP income. This 1 crore is also PGBP income. For KFC, these two will be the expenses can be debited in their P&L account. Is that clear? So income includes loss also. It's not only profit, loss will also be forming part of the income only. So non-compete and non-sharing. Clear? Now, eighth one being key man insurance policy. Key man insurance policy. Already we studied key man insurance policy. Where did we study? In salaries, section 17 class 1 is all about 17 class 3. Huh? So what's that? Profit in lieu of salary. In profit in lieu of salary, key man insurance policy. Okay, employer and employee. This employee is very, very important for the employer's profitability. So if anything happens to the employee, definitely there will be a small problem in their own profitability. So in order to safeguard the profitability in the absence of employer, in the absence of this employee, employer can insure with LIC company, stating that he is the key man for us, sir. And because of his option, means absence, we will be losing a huge money. So I'll pay a premium for his life. Something happens, then LIC will release the compensation to the employer. If the employer gets any compensation, in case of anything happening to the employee, then this compensation will be the PGP in the hands of the employer. Out of that compensation, a portion is given to the employee, then it is called profit in lieu of salary. Is that okay? Hope already I explained in salary itself, right? In salary itself, already I explained here. If this employee being key man for me and I insure his life in order to protect our profitability by paying the premium. Anything happens to the employee, then automatically LIC gives the compensation to whom? It may be to the employer or to the employee itself. The employer may have some arrangements or something happens worst. To protect your life later on, I insure and you'll get some compensation. So as per that agreement, employee gets the compensation from LIC out of the premium payment by the employer. Then it is called profit in lieu of salary of employee. Anything happens to the employee, business itself gets affected. To prevent from their own business loss, they can insure. If anything happens, then this employer gets the compensation from the LIC. If they get the compensation from the LIC, this compensation will be considered as PGBP. Is that clear? Hope now you'll be able to understand. These are the terms in detail. Now, so we have completed the number 1 being business profession vocation, number 2 being association to members provided only for the specific services, number 3 being termination and modification, number 4 related to foreign export related, import license, duty entitlement passbook, duty free certificate, and cash assistant for export, duty drawback. Duty entitlement passbook is similar to duty drawback, having slight differences, right? And you can get the perquisites also for your business, also be considered as PGPP income. Interest, salary, bonus, commission, remuneration by whatever name may be offered to the partner of the firm will always be considered as PGPP income only. And non-compete fee and non-sharing fee also we have studied. If you are receiving, then it will be also considered as PGPP income. Keyman insurance policy also PGPP income. Not only the policy amount, including the bonus will also be considered as PGPP income. Ninth point we'll study later on along with section 35 AD. Tenth point also we'll study along with the later chapter, section 35 AD. Okay. Ninth and 10th. Okay. Now, let's move on to the next one. Section 28, class 5A. Under the same section 28, especially class 5A, explains about any compensation if you receive, okay, restraint of trade will be considered as your PGPP income. Restraint of trade. Is that clear? Now, not carrying out any activity in relation to any business. In relation to any business will be the first one. The point what we have discussed regarding the Apollo Hospital and Dr. D will be the nice example for this. Apollo Hospital had the agreement with Dr. D not to do personal clinic work later on. Okay, that's what about restraint of trade. For that, any additional payment is given, no, that is called PGPP only. But that should not be in the form of capital gain. If it is being the capital gain, it is taxable under capital gains head. Clear? We have non-compete fee and non-sharing fee in capital gains also. If it is taxable under capital gains, not taxable under PGPP head, right? Like transfer of right to manufacture, right to produce or process any article or thing, or right to carry on any business. These are the examples. These are the things you are going to study along with the capital gains chapter. Okay, you will study along with the capital gains chapter. Right to manufacture or right to produce. So if you want to manufacture something, you need to get the permission from the original owner for that, right? So if the original owner transfers the right to manufacture to me for a consideration, that will be capital gains. That's a part of asset and will be taxable under capital gains, not here. Is that clear? Right to manufacture, right to produce. As well as right to process any article or thing. Okay, any article or thing. And this one, section 115 BBG, compensation from multilateral fund of the Montreal Protocol on substances that deplete the ozone layer under UN environment program. Okay, for this, if you are getting any compensation, it is also not considered as your PGP income. Okay, usually the tax rate on this being 10% will be allowable without deducting any expenses. You will study this at your final level. Let me explain what is this logic. Montreal Protocol on substances that deplete ozone layer. You know that ozone layer, right? So the UV radius are prevented by the ozone layer because of the CO2, right? Carbon monoxide and other thing. It spoils the ozone layer. Then automatically skin allergy will also be there due to the tear in the UV, means the ozone layer, right? So in order to prevent, what we have to do, you have to grow more trees. That's how the advice is there. Okay, because of the industrialization, lots of carbon monoxide is emitted. That spoils the layer. Okay, ozone layer. Then what happened? You know, all the UN members put together have the restrictions. Okay, UN members. Okay, especially UN Environment Program. So maybe USA, India, China. Okay, what they calculate is you can release around probably some number, we assume you can release 100 CO2 only. Okay, carbon monoxide should not be beyond this limit. That's how they fix the number here. Here 100, here 100. That's how the number is fixed. Is that okay? Now what happens? No, if China reduces the 100, the emission from 100 to 80, and India cannot control this, they can emit around 110. What happens then? Okay, China is doing much better way. Okay, immediately Chinese will get a subsidy, and India will be penalized for the extra emission. India will be penalized, and China will get subsidy. Like, so what happened suddenly? India also made a plan. The UN environment suggested a plan. Okay, internally you have so many companies, A, B, C. All the three companies put together, 40, 30, 30 is going to be released. So the overall value being 100. Okay, this is the limit. But currently what happens? A 45, B 35, C 35. That's how they release. In order to implement this strict control, A has installed the pollution control mechanism. Okay, lots of pollution control equipment installed. Because of that, A has substantially reduced to 15, becomes only 30. Right. So what is the limit given to A? 40. What is the emission now released after the installation of the pollution control equipment? Only 30. So they saved 10 numbers of emission. Immediately A will be given a subsidy, like, okay, that is called compensation. And for B, no, they have released 5, so they will be penalized. C will be penalized. These two are penalized, and the penalty collected is given to A as a subsidy. Even if B wants to get the subsidy, they need to install the pollution control equipments to reduce the carbon emissions. So this is how the UN environment program is organized. Okay, Montreal Protocol. On what? Substances. What's that substances? Carbon emission. Carbon emission, that which depletes what? Ozone layer. Is that clear? So Montreal Protocol on substances, they had the policy to be followed by each and every manufacturer, every country, so that the ozone layer means may be prevented. So by installing lots of pollution control equipments and all. Is that clear? For that, if you are getting any compensation, it is not falling under PGVP. Whatever the amount you get without any deduction, 10% will be the tax. So for example, for this one, A gets around 10 lakhs, then automatically 10% will be your tax payment on this. 10%, flat rate 10% only. Usually company will pay 25% or 30% depending upon the scenario. They have to pay the tax. Rather than 30, they have to pay only 10%. Sir, what happens, sir? I installed the pollution control equipment and maintenance also there. We have to spend around 4-5 lakhs. And no, you cannot subtract anything. Flat, whatever the receipt you get from the UN program, on that 10% will be the tax payable in this case. Is that okay? So hope you will be now able to understand any compensation you are receiving for restraint of trade will be considered as PGB provided if the receipt is for the capital gain nature, it will be not taxable under PGB, taxable under capital gains. There will be study transfer of right to manufacture, produce or process or any article or thing, or right to carry on any business. This is the first point. That will be completely taxable under capital gain chapter. We have the separate illustrations also for this later in capital gain chapter. And 115 BBG is all about receipt of compensation from multilateral fund as per the provisions or policies of Montreal Protocol on substances. Substances is nothing but carbon emission that deplete the ozone layer, that spoils the ozone layer, right? So in order to control that, the UN program is there, so you can fulfill the conditions and gain some compensation, right? This is the first point. Okay, this is all about business. Second point is all about not sharing any know-how, patent, copyright, trademark, license. Okay, all these things are intangible assets. For that, if you are getting any compensation, that is also considered as PGBP only. This is nothing but detailed explanation of this point. Okay, seventh point explained in detail. Okay, non-compete fee, non-sharing. This is completely non-sharing. Okay, this is not completely about non-compete fee. Non-compete fee is part of restraint of trade. as well as non-sharing is also a part of restraint of trade. Because once in CA exam, no, especially this point was asked for 5 marks to 6 marks illustration, theory question. So as 5 marks and 6 marks, you cannot write only these 2 points. By the time you have to write all these points also, right? Clear? Now let's move on to the next one. Here, PGBP, business, profession, vocation, including income from speculative transaction. Income from speculative transaction. If you are getting any income from speculative transaction, that is also falling under PGBP. Is that okay? Now, what is called speculation business? What is called speculation business? Speculation business involves speculative transactions. Okay. So, what is a speculative transaction? What is a speculative transaction? A transaction which a contract for purchase or sale of a commodity including stocks, shares is periodically ultimately settled otherwise than by actual delivery, otherwise than by actual delivery or transfer. Okay. Okay, how many of you heard about the term booking, bus booking, reservation? Reservation you might have come across. Fare booking, seat booking, some concept is there. I could not remember that term. How many have heard about the booking? Huh? Seat booking. Huh? Heard about that or not? Anybody? So reservation means you have to pay full fee. If the seat 520 or 525 is the ultimate value. Booking is nothing but you just give a token advance like around 10 rupees. So if you pay 10 rupees, you are guaranteed with the seat. Okay. So once you board, then you have to pay the full fare. That concept is called seat booking. Anybody heard about that concept? Anywhere it's applicable still? Huh? No? Are you going by bus at least? No, sir. Huh? Only aeroplane. Okay. I'm not talking about running behind. Yeah. Are you able to see the screen? ST Mini. You can log out and join again, no issues. Now you can log out and join because it's visible now only. Make it faster. Okay then. See, you have to understand the concept called futures and options. How many of you are aware about the F&O concept? Futures and options. Sir, my future is question marks are always. I don't know what to do. Futures and options. My future is always options, sir. It's not concrete. F&O, futures and options. For example, Mr. A about to retire in a matter of 3 months. He will get a bulk retirement benefits after 3 months. So after 3 months, he wants to invest particularly share of XYZ company. Currently, the price being 100. Currently, this is what about the current price. And he supposed to invest only by the end of 3rd month because he doesn't have the cash today. He gets the cash later on and he can invest by the end of 3rd month. He doesn't have the cash currently. Clear? 100 rupees. But here's your fear. What's that fear? If the price increases, what happens? Unwantedly, he has to spend more money. Is that okay? So current price is 100. he can invest only by the end of third month, and he has a fear if the price goes up, then it will be a trouble for him. If the price goes to 200, then what happens? He has to pay 2 times of the same money, same share. It's an unwanted loss for him. Then what he can do? What he can do? Borrow and buy today. 3 months later, settle the borrowings out of the retirement benefits. 3 months interest may be around 3 rupees or 3 rupees or 4 rupees. So 103. By paying 3 rupees excess by this way, now he is confident that the price will not go beyond this. If the share price is 200, he is pretty happy. But usually it will be reverse only. If immediately Trump announces 40%, then it goes to 5%. 50% rate. 100 becomes 50 rupees then. Anyhow, logically you think. Current price is 100. He is supposed to buy in a matter of 3 months later, as he gets the money only by the end of third month. By the third month, if the price goes high, then it will be a trouble for him. By the same time, another person, Mr. B, he is supposed to get married in a matter of 3 months later. Currently, he has a share. And his fear is, if the price goes down after the 3 months, what happens? Rather than his marriage conducted in a big mahal, maybe in temple he has to arrange the marriage. So he also has a fear. So the fear is totally in inverse manner. His fear is higher price, his fear is lower price. Now what happens? Mr. A and Mr. B will have the tie-up. No worries, sir. Already have the share. I need the money by the end of third month. Mr. A says, I need the share by the end of third month. So I have the money by the end of that. We'll come to a deal. If I borrow and purchase, 3% interest will go for 3 months. 103. Right. And Mr. B also has a plan. He can sell now and he can invest in the market. In a stock, in the bank. If he invests in the bank, he gets small interest. Right. So what happens? A can borrow 100 and interest rate for 3 months being 3%. 103 is the price. This is what about borrowing in interest. For him, sell and invest. He can sell today itself and invest. If he invests in the bank, he will get to only 1% interest. Okay. For the borrowings, the rate of interest is higher. For the investment, he will be getting lower money. Probably he gets only 1. So here, you just see, XYZ is pretty confident he will get at 103 by doing this plan. B also pretty sure he will get 101 doing this way. Rather than playing this way, these two will now enter into an agreement. Why don't we fix 1 or 2 be the fixed price at which we are going to purchase or sell 3 months later? By doing so, A will get 1 rupee benefit and B will also get 1 rupee benefit. A gets 1 rupee cheaper and B gets 1 rupee extra for his share. It's pretty interesting, right? This is what about booking the price today itself for the future purchase. Okay, go give the money, get the share. Then it's called spot purchase, cash market. And book today, purchase it later by paying the rest of the money later is called future. Hope you will be able to understand the difference between spot and future. Spot otherwise cash market. Spot and cash market. A and B will be having the agreement to fix a common rate. So that will be beneficial for both. But actually no. Exactly 3 months later. If the price is definitely fluctuates. Maybe 150. What happens then? Who is happy? Who is happy? A or B? B is. How B is happy? B committed to give for 1 or 2. A is pretty happy. The next moment who makes a call? A will make a call continuously B and B becomes non-reachable. Instead of 150, if it is 50, what happens then? B is pretty happy. Anyhow, he booked for 102. Definitely Mr. A will come and purchase it for 102. Now B will make a call and A becomes unreachable. So if the agreement between these two and there is a trouble of execution on the maturity date, then this is called future. future. Sorry, um, forward contract. Sorry, forward contract. This is called forward contract. If there is a mediator, then it's called future. A mediator will come, like a stockbroker. If stockbroker comes and deals through stockbroker, this cheating may not happen. The stockbroker, routed through BSc or NSC, will ensure the execution of the contract at any cost. So, because of that, of course, there's a small payment for them also. Anyhow, we are safer that this contract is anyhow executed, then it's called future. You have to understand the difference between future, forward, spot. Ready cash, give cash, take the product is called cash market or ready cash or spot market. And book a price at which it is going to be transacted later on, and you involve yourself with other buyer or seller between these two. There's a problem of execution, then it's called forward contract. And the same way, I supposed to purchase 1 or 2 months later, routed through a channel where he is responsible for execution, then it's called future. Okay, spot, future, and forward. Clear? You can link with what? Bus ticket booking. You know that currently bus fare may be around 600 or 700 rupees, at the maximum 1000 rupees around. For Trichy to Chennai, it is around 1000 rupees. In Diwali time, it reaches up to 5000 rupees. By the time flight ticket also not available, it may be sometimes cheaper. If you could have booked today, it may be cheaper. For Trichy to Chennai, flight ticket may be cheaper rather than going by omnibus. 1000 and 5000. If you are given the chance to book any number of tickets, what will you do? Book around 10 tickets. 1000 into 10. Are you going to travel yourself? No, sir. I will sell in the black market for 5000 rupees. So I can make huge profit in that. Okay. Clear? So in this case, what happened? You book the ticket not for your travel. You need to manipulate, or you can make a profit by transferring, expecting the demand sometimes later. If you are doing this way, this one is called again future or forward, but arbitrage or speculation. This is called speculation. Why do I call this speculation? Speculation is nothing but guessing without studying, going for the examination and speculating yourself. This time exam question paper very easy, which is not possible. During the COVID time, why didn't you study properly? I thought last year all pass, this year also all pass maybe. So I went without preparation. What happened? God has no mercy on me. Right, the same happens. So this is called speculation. This is called speculation, guessing. So we purchased around 100 tickets at 1000 rupees. We thought we can sell for 5000 rupees. We can make around 4000 rupees profit per ticket. For 100 ticket, 4 lakhs rupees. Everything is in my mental calculations. Immediately, COVID shooted up. Government announced lockdown. All the tickets in your hand will be now lost. Speculation, you had some guessing, and based on that you will operate. It may either maybe turned up as your profit or loss, not the real one. Understand that I am supposed to travel. In order to safeguard my seat, I book. Then it is called hedging. It is called hedging. One of my friends wants the ticket. I knew very much well with the bus owner. I purchased for 1000 and selling the ticket to my friend for 1500, making 500 rupees profit nicely. Arbitrage. You understand? You understand the difference? For my requirement, if I am purchasing a reservation, doing the reservation, it's called hedging. Hedging is nothing but constructing the compound. Compound, you know, is called hedging. Okay, preventing from risk. Risk of non-availability of seat. How can I prevent? Okay, give 50 rupees or 100 rupees excess for reservation charges to book the ticket ahead. Hedging. Arbitrage, in one place it's cheaper, another place costly. I know that information, so I can purchase from cheaper place and sell in the higher place. Guaranteed there is a profit. because of my knowledge. That is called arbitrage. In case of speculation, just a guess. Somehow there will be huge demand, and definitely I can purchase and hold today. When the demand shoots up, the price will also be increasing. I can make huge profit. If I have that intention, then it's called speculation. Really, I'm not going to purchase. Really, I'm not going to purchase. Now, see this, a transaction in which a contract for purchase or sale, a contract for purchase or sale. So, purchase or sale. When? Not now, later on. What could be? Stocks or shares. Ultimately, am I going to purchase? No. If I'm going to purchase, then it may be either hedging or arbitrage. No, ultimately. Otherwise, then by actual delivery, I'm not going to take up actually. Finally, I'll just transfer to somebody else for a profit, which is called speculation. Clear? Transaction not deemed to be speculative transaction. Number one, hedging. What is called hedging? In respect of raw material, merchandise, or stocks and shares, you can do the hedging. Okay, hedging is nothing but I am in need of those goods, definitely. And to safeguard from the non-availability of goods, I booked ahead for my requirement, then it's called hedging. And forward contract, definitely I need. So I entered an agreement with some third party to purchase later on. Between two parties is called forward. Between two parties mediated through broker and stock exchange, regularized, then it's called future. And trading in derivatives through recognized. Okay, this is called future. This is called future. And commodity derivatives. Commodity derivatives. Okay, in a recognized association by paying commodity transaction tax (CTT). If you are buying and selling the commodity in the market, okay, derivatives market, sometimes you have to pay the CTT, but that CTT is not applicable for the agricultural commodity derivatives. Okay, derivatives is nothing but an instrument. Its value is derived from the original asset lying on underlying asset. For example, bus ticket fare being 500 rupees. Okay, bus ticket fare being 500 rupees. You can pre-book this. So I booked by paying around 50 rupees reservation charges ahead. This is called pre-booking. Okay. Suddenly Diwali, huge demand is there. Automatically the seat price becomes 2000 rupees. But if I have the reservation, that's a coupon like. If I have the reservation, I can get the seat for 500 rupees. Now come on, tell me, what about the value of this coupon? The value of the coupon is the difference between these two, 1500. Because if I have the coupon, I can get definitely a seat for 500 rupees. Without that coupon, I have to pay 2000 rupees. So 1500 is the worth for the coupon. The coupon's price 50 to 1500 increases, due to what? Due to the demand for the original asset. The original asset is seat. Okay, see here. We'll see all these concepts here. Yeah. Well, just go for Tata Consultancy Services, TCS. See, today's price is 3032. Today's price is 3032. If you pay 3032, you'll get the share today itself. Spot market. Here, we have been given future. Future for how long? Usually in India, 3 months is there. This is August. August month future is there. September month, October month. 3 months futures may be available. See here. This is August month, 3036. September month, bit higher. The price is bit higher because of the interest and other costs. October, the price is still higher, 3058. Okay, this is called future. Usually, the cutoff date for buying and selling of the future ends exactly the last Thursday of the month. Last Thursday of the month. Is that okay? For example, in case of August 28th, August 28th will be the last Thursday of this August month. Okay. So 28th being Thursday. Is that okay? This one being 28th. Similarly, if you go for September, September 30th will be the Thursday, last Thursday. Okay. In September, 30 will be the Tuesday. So always the last date being Thursday of the month. This is called booking for a price by giving a reservation charges. A small amount will be given. That's called option. Already told you, no, bus fare paying completely or a small token advance like you are paying. That's called bus booking. That is called options. So in options we have call options and put options all. So you have to pay only 56 rupees like. Anyhow, you learn all these things at your final level, not here. But here the main thing is I book with the intention to transfer to some third party later on without for my personal consumption is called speculative transaction. But regularly I need to purchase. If there is any non-availability or price hike, what can I do? I can reserve ahead, then it's called hedging. Or I can enter into a contract with some third party for my requirement, forward contract. Or trading in derivatives. The F&O in the stock market we have seen, no, that is called derivatives. Derivatives. The value of this future as well as option gets affected due to the price of the original share. That's why price of the underlying assets. That's how the statement is given. Okay, it is called derivatives. The value of this one, futures and options, derived from the underlying assets, TCS company share. Okay, if you say, what about the options price are 56, 56. This 56 gets affected based on the price of the TCS company shares. Okay, clear? Okay. So in case if you want to involve in commodity derivatives, of course we have the commodity derivatives also. Okay, commodities. You can buy gold, silver, pulses, oil and all you can purchase. Okay, see here, gold being this much, 1,01,272 per 10 grams, and crude oil, copper, silver, you can purchase all. This is spot rate, spot rates. Okay, so this is called multi-commodity exchange, MCX in short. Clear? Gold, silver and all we have been given here. Crude oil, all these things are there. You can go and purchase. Okay. Now, for buying and selling of this, it involves a small payment, which is called commodity transaction tax. Commodity transaction tax. Unless you pay the commodity transaction tax, it will not be considered as business income. Okay, it may be speculative. But in case of agricultural commodity, pulses, grains, for all these things, you know, this CTT is not applicable. For that only, the CTT is not applicable. Clear? So, speculation business involves speculative transaction. Speculative transaction is nothing but you purchase later on, but ultimately, otherwise than by actual delivery, you are not going to deliver it. Means you are not going to take up. You are going to just transfer this. Okay, if you are purchasing the gold in commodity market, multi-commodity exchange, what happens? On maturity date, you just transfer to some third party. Definitely, you will not get physical delivery, which is called speculative transaction. Okay. But of course, I mean, needs are definitely I'm going to take up, then it's called hedging or forward. And trading the same F&O in the recognized stock exchange, I've just shown that, right? So, recognized stock exchange. And that too, in case of commodity derivatives, CTT is paid, then it is called non-speculative transaction only. And in case of agricultural commodities, CDT is not applicable. So, PGBP income is classifiable into two incomes. Number one is speculative income, other one is non-speculative income. Okay, speculative as well as non-speculative. Even some case specified business. Okay, we'll study all these things later on. But anyhow, let me explain these two concepts here. If there is any loss, that loss can be adjusted in the subsequent year's profit, maximum 4 years. In the previous year 24-25, if there is a loss, that loss can be adjusted in 25-26, 26-27, 27-28, 28-29. Within these 4 years, you can adjust the loss, else you cannot claim the loss to be subtracted in your income in case of speculation business. In case of non-speculation business, 8 years you can carry forward. Means government doesn't motivate this kinds of business. This one is quite okay. That's the logic. You have to understand whether the business is speculative or not. Clear? Now, we have completed the section 28. Section 29 is all about PGBP computation. PGBP computation. The income referred in section 28. We have seen all sort of PGBP income under section 28 should be computed in accordance with section 30 to 43D. You have to study between these sections 30 to 43D. Right. And the methods of accounting, either it may be cash or accrual basis. While preparing the trading and P&L account, usually you will follow what method? A mercantile system or accrual system. If there is any outstanding, you add. If there is surplus, you can subtract. Is that clear? But for the taxation purpose, you can either follow the mercantile system or cash system also allowed in case of PGBP income as well as income from other sources. Right. Now, in your trading and P&L account, you prepared find the net profit being 1 lakh. Right. This 1 lakh you found out will be as per the Companies Act if you are preparing for a company. Companies Act. Okay. Companies Act. Or financial accounts rules and regulations you follow for preparing the trading and P&L account, you find out the net profit being 1 lakh. Some of the items in the debit side and credit side, okay, may be allowed, may not be allowed. Okay, may be allowed, may not be allowed. Those things are given under section 30 to 43D. Section 30 to 43D. Usually, provision for doubtful debts you will be debiting in the P&L account, say for 5,000 rupees. On 5,000 rupees is there. But under section 36, this provision for doubtful debts cannot be debited. Section 36 says that provision for doubtful debts cannot be debited in the P&L account. If you don't debit, what happens to net profit? With the debiting, you get the net profit 1 lakh. If you remove the 5,000 rupees, debit item is decreasing, automatically profit will be increasing. So you have to add 5,000 back. So the ultimate value being 1 lakh 5,000. This is what about the PGBP income for the tax purpose. Okay, similarly, for each and every income and expenses, some sections may be referred, some section reference will be there between 30 to 43D. You have to read those sections carefully and incorporate for calculating the PGBP income for the taxable purpose. Is that clear? Now, let's start with the first one. Let's start with the first one here. Section 28, charging section. 29 is computation, mode of computation. For the computation, you have to follow what? Section 30 to 44. You have to follow those items given in these sections, right? Now, let's start with section 30, 31. Section 30, 31. Section 30. Okay. Asset being building. Building related expenses. Building is an asset. And building related expenses, what are they? Rent, rates and taxes, and repairs, and insurance. What happens in your trading and P&L account and balance sheet? What will you have? You have building, say 100,000 rupees. Building being 100,000 rupees. Building related expenses we have no. What are the expenses we have? If you have the building, you can claim the depreciation. Probably around 10 rupees you will be claiming. Can be debited here, depreciation. Apart from that, the building requires some repairs. Repairs can be debited here, probably 5 rupees. Apart from that, for the building, property tax rates may be given to the municipality. Okay, rates and taxes. Maybe another 5 rupees. You have to debit that. You have to debit that. To safeguard from flood and other thing, you could have insured. Insurance premium paid for this. Probably 3 rupees. That can also be debited. That can also be debited. In case of repairs, you know, if it is being the revenue nature, then it can be debited. If it is being the capital nature, it should be addable here. Probably 50 rupees we spend for renovating completely, or the repair has long life to last. Okay, huge expenses and the long life also it has. Then that should be part of the assets. So in case of repair, two classification is there. One is being the revenue nature, another one is being capital nature. If it is capital nature, it should be added with the assets value. In case of revenue nature, it can be directly debited to the P&L account. Is that clear? So what happens? These things. And if you are not being the owner, you need to get in rental. Any rent payment will also be debited here. So rental expenses related to the building can be debited. And rates and taxes, nothing but the tax you are supposed to pay to the municipality also be debited. And repairs being revenue nature can be debited. If this being capital in nature, will not be debited, but of course it can be subject to depreciation. If it is capitalized, you can claim the depreciation later on. In case of insurance, that can be debited. That can be debited. Is that clear? 31. Section 31 is all about plant and machinery, furniture and fixtures. Furniture and fixtures. For this, of course, repairs, revenue nature will be there, can be debited. And insure, if you insure that, can also be debited. Clear? These things are also be debited in your P&L account as per section 31. Section 30 says any expenses related to the building can be debited to the P&L account. Examples of expenses related to the building being rental of the building, rates and taxes payable to the municipality, repairs where it may be the revenue nature can be debited, insured building, for that insurance premium if you are paying, that can also be debited. In case of plant and machinery as well as furniture and fixtures, repairs related expenses, that to revenue can be debited to the P&L account, insurance can be debited to the P&L account as per section 31. As per section 31. Of course you know that rates and taxes not applicable, right? You don't pay any rent and taxes for the plant and machinery. And of course, rent may be possible. Sir, I don't have the furniture for the immediate meeting hall we organized. So we supposed to have around 100 furniture. So we got it rental, sir. Can I debit that rental charges? Yes, of course you can debit, but not under section 31. This is as per section 37. This can be deductible under section 37. Okay. Under section 37. Clear? As per section 37, it can be debited. Section 37 says any expenses related to the business, revenue in nature, wholly meant for the business can be debited. That's all. We'll study section 37 in detail later on. Anyhow, a small point is given here. Okay. Rent on plant and machinery and furniture deductible under section 37. Under section 37. Is that clear? Sir, what happens if the repairs being capital nature, sir? If it is being capital nature, it can be addable with the concerned asset and eligible for claiming the depreciation. Depreciation will study under section 32. The most important time consuming section being section 32. If I complete section 32 depreciation calculation, almost 50% PGBP chapter is over. So we go for 2 to 3 sessions, at least 2 complete sessions I need to cover only for the depreciation. A lengthy topic. Okay, once we cover that depreciation, the other topic may be completed just like that. So whatever the asset may be, further if you do any renovation expenses, capitalized, that should be capitalized. If it is capitalized, it will be eligible for the claiming depreciation under section 32. And one more point that you have to understand is nothing but whether the building and plant and machinery wholly used for official purpose or partly used. Okay, partly for private purpose. If it is partly used for private purpose, to that extent the amount cannot be debited. For example, the rental expenses being where 40% of this building is used for self-occupancy purpose. Then in your P&L account, how much you can debit? Only to the extent of official purpose. 60%, 600 can be debited. This 40%, 400 is disqualified under what section? Section 38. So I have given around 5 sections here. 5 sections here. Section 30 is all about building related expenses where the building is used for business. We have a set of 4 items to be debited: rent, rates and taxes. Usually in US, no, the taxes are named as rates, so it has no other meaning. Rates is equal to taxes. And repairs being revenue nature can also be debited. Insurance for safeguarding the building will also be debited. So these are the 4 items we have. And in case for plant as well as furniture, machinery, you have the repairs as well as insurance can be debited to the P&L account as per section 31. Sir, if I pay any rent, sir, of course that can also be debited. But not as per section 31, as per section 37. Section 37 says any rent on plant and machinery and furniture is deductible because section 37 says any expenses related to the business and revenue nature, definitely it's a part of amount to be debited in your P&L account general class. General class. Okay. Section 38. Section 38. Okay. Section 38 is nothing but if the asset is not wholly used for official purpose, not used wholly for official purpose, then proportionate deduction only allowed. So 40% is for self-occupied means only 60% can be debited as per section 38. Okay. And the most important section being section 32. In case of capital nature expenses, even for the repairs and replacement renovation, that can be added with the assets, thereafter it is eligible for the depreciation. So as per section 32. So we have completed, what are the sections we have completed here? Section 28, 29, mode of computation. So mode of computation, it's not a separate section to study. At the last, we will calculate the PGBP as per the provisions given under section 29. It's a single liner, like you don't need to mug up this one. Then we started with the building related expenses and we referred plant and machinery as well as furniture and fixtures related expenses, and section 32 depreciation, section 37 general expenses, and section 38 partly used for official as well as private purpose. Is that clear? Now depreciation chapter I may start with the next in the next class because it requires a complete 1 hour lecture or 1.5 hour lecture with some illustration. We will cover up in the next class. Okay.